In the area of technology and artificial intelligence, AMD and Intel are two of the most undervalued stocks within the semiconductor space. But which one is a better investment? And how do they stack up against one another? I plan to break it down by comparing and covering these 4 different points. I'll start by providing a company overview and some history of both AMD and Intel. Next is the financial metrics. We'll dive into the typical suspects within financial metrics, such as the P/E ratios, revenue growth, and of course their profitability. Then I'll move on to the stock performance. We'll look at how each company's stock has performed over the past few years and what their current market sentiment looks like today. The next will be their expansion plans, where I'll compare a few of the different highlights that are regarding their products and their innovations to see who is leading in terms of technology and their market adoption. Now, I can't cover every single detail, but I'll at least try to touch on the areas that are impacting the stock over the next few years. And then I'll finish it off with my opinion on which stock I see as a better option today and which one may be better in a year or two. Seeing as how Intel is over 56 years old and they created the world's first commercial microprocessor in 1971, they deserve to have their story told first. Interestingly enough, in the 80s, they focused primarily on memory chips. And then they shifted in the 90s to microprocessors for computers, with their flagship product being the Pentium processors. They were tied so closely with Microsoft, and they were often referred to as Wintel. At that time, Intel maintained over 85% market share in the 32-bit microprocessors. And in 2023, Intel maintained 68% market share in the microprocessor area. And these client computing group products are its bread and butter for its everyday business. Intel operates in 5 major areas of their business, and they are Client Computing Group, which is mostly their Intel Core processors and the chipsets for computers and graphics. Next is their Data Center and AI Group, which consists of their Xeon processors, GPUs, Gaudi AI accelerators, and Intel's Optane memory. And their next group is NEX, or the Networking and Edge Group, and they represent Intel's efforts to capitalize on the growing importance of edge computing, 5G networks, and the increasing demand for flexible, programmable network infrastructure. And their last group is the Foundry division that was formed as its own P&L starting in Q1 of 2024, where the goal is to offer chip manufacturing within their foundry for both Intel and external customers. This opens up a broad growth channel to compete with other foundries like Taiwan Semiconductor. And these happen to be the 5 core businesses that I'll be speaking to within the financials. But for now, let's cover AMD, where they have a very similar story to Intel, but AMD happens to be exactly 1 year younger at 55 years old. They began with making memory chips in the 70s and the 80s, and then they shifted in the 90s to compete against Intel in microprocessors, and also against NVIDIA with their graphics cards, where AMD was the brand that was offering value for performance. As for their business units, they have 4 that I'll be speaking to, where their first is their data center business that revolves around its EPYC processors and Instinct accelerators, or GPUs. The EPYC processors are in direct competition with Intel's Xeon processors, and their MI300 series GPUs are in direct competition with NVIDIA's infamous H100s. Their next business group is the client section that's very similar to Intel, where they focus on their Ryzen computer processors for home computers and laptops. And their third group is the gaming segment, responsible for the Radeon graphics cards or discrete GPUs for consumer use. And AMD's last group is their embedded business that is very similar to Intel's Networking and Edge group, where AMD offers an array of processors and chips to be used in industrial and commercial applications, such as healthcare and automotive. And as you look at the groups for each company, there is a lot of overlap between the two. One of the few areas that is unique is that Intel has its own foundry and in some ways can control their own destiny for their product or become contract work for all the other chip designers. Now, I love focusing on personal finance, and in my first video, I explained the importance of walking away from the corporate lifestyle and investing in myself, like exercising more. And that's why I love my YeSoul G1 Plus bike, because it costs about 1/3 the price of the branded bike at only $499 for a limited time, and it has most all of the same bells and whistles, making it a great Peloton alternative. And I can stream any content from my phone onto the screen with a provided cable, and it has all my biking stats like distance, power, and resistance all on the screen. Or I can use their app for a fee that has a ton of other workouts. Plus, it has a 360-degree sound for an immersive experience. I love that I can find a ton of free content on YouTube to either ride in the Swiss Alps or pick a free spin class. Yes, the bike is a great price at $499 for a limited time, and my viewers can also get an extra $100 discount with the code that's listed right here or down in the description. Now let's shift gears a little bit and begin to look at the financial metrics between the two companies, where AMD has a market cap at nearly $260 billion, which is twice that of Intel. But when we look at the trailing 12-month revenue, things get a little bit interesting, where Intel's $55 billion is nearly twice that of AMD's $22.8 billion. So what exactly does that tell us? Well, it indicates that Intel is potentially undervalued, or possibly that AMD is overvalued as a comparison of their price-to-sales ratio, where AMD sits at over an 11 and Intel has a price-to-sales ratio of 2.34. And as a quick reference, NVIDIA has a price-to-sales ratio of 37.9, which is extremely high. And to level set them all, the average price-to-sales ratio for the semiconductor industry is at a 4.49, which leans more heavily into the form of thinking that Intel is certainly the most undervalued of the group at a 2.34 ratio. Now, going a step further, the gross profit for Intel is twice that of AMD's, but despite that, the earnings per share is equally low for both companies. Neither one of them is winning in the earnings per share department. To add a little bit of clarity, let's look at the PEG ratio, or the price to earnings to growth ratio. And as a quick refresher, this ratio is best with a lower number to indicate an undervalued situation. This is because it uses the future growth as the denominator in the equation. So the higher the growth, the lower the overall number. This happens to be one of the key items that I look for within all of my investments. It isn't perfect, but it is just another data point that I use within making my decisions. And when looking at the PEG ratio for these two, AMD is substantially smaller than Intel. And this may indicate an undervalued situation based on the estimated growth. And keep in mind that all of these attributes can change a great deal from quarter to quarter. And in researching this, I thought it might be good to compare some of these attributes from 3 years ago during the same quarter. And one thing you'll notice is that AMD's revenue and profit consistently grew, but the earnings per share took a major dive, and the P/E ratio was much higher 3 years ago at 143. And when we do the same comparison for Intel, it's not as good a story. Most every single attribute has declined compared to 3 years ago. In fact, its revenue has dropped by 30%, and its profit dropped by 47% since the same quarter in 2021, which makes this a very good time to transition to the trailing 5 quarters for each business unit within each company, where we'll start with Intel. For Q1 of this year, the shining star is the Client Computing Group, which is the retail processors, and it happens to be up 31%. But that's due in part because of the Q1 of 2023, it had dropped by negative 38% from 2022. So yes, it's showing year-over-year growth right now, but it is a big drop from the $9.3 billion in 2022 for Q1. And the data center and AI group is up 5%, but it is half the sales that it had in 2022 at $6 billion. And one outlier for Intel is the Foundry division, where they manufacture chips for themselves and other companies. It was showing decent growth from right to left looking at Q1 of 2023 at $118 million to the $291 million in Q4 of 2023. But in 2024, they restructured that group and they rolled a lot into it, where it is now at $4.4 billion in Q1 of 2024, but with a major loss year over year at a negative 10%. In looking at these quarterly trends, one may conclude that Intel has finally reached bottom and is slowly beginning to grow back out. But with the Foundry division making up such a large chunk of their revenue and being restructured, it's really cloudy and it's difficult to understand where it's heading. Now let's look at AMD's business unit quarterly trends, where its data center revenue had been flat for a few quarters back to back, and then had massive growth in Q4 of 2023 at $2.3 billion. And also in Q1 of 2024 at $2.3 billion. And this is a similar story for their client business. But in the areas of gaming and embedded, the business has dropped significantly each quarter. And I haven't heard enough from AMD to say if either their embedded or gaming divisions are on track for any major growth. For now, I expect the majority of AMD's growth to be coming from their data center and their client areas. Now I'll briefly go over the stock performance. And then I'm going to transition into the plans for expansion and growth, and I'll finish it, of course, with my opinion on these two companies. In looking at the year to date, AMD's 14.8% is a huge gap from Intel's negative 36%. And sadly, that is the case in looking at all the different timeframes. Where I want to showcase this graph over the past 5 years of stock growth for AMD. For starters, it's all green, where there's been consistent growth, where AMD has been able to nibble away at share from both Intel and NVIDIA. And as a major contrast, here's the 5-year graph of Intel. And for any of you that are out there that happen to be colorblind, this graph is completely red, where Intel has been on a downward trajectory for quite some time. But is it at the bottom and just now starting to come back up? Well, let's move on to how each company is planning for their expansion and growth. Where Intel debuted earlier this year, their Gaudi 3 accelerator, promising 50% on average better inference and 40% on average better power efficiency than NVIDIA's H100 at a fraction of the cost. In fact, some news articles tout Gaudi 3 will cost about half as much as NVIDIA's H100. But this also comes at a time when NVIDIA is launching their Blackwell superchips, the tout being 4 times faster and 25 times more efficient than those H100s. Soon enough, we'll see if customers want a slight improvement with Intel's option at major cost savings, or do companies simply want the top performance regardless of the cost? Clearly, I don't have the answer, but at a time where everyone is looking to build out the best AI models, performance might not be more important than cost savings, because the reality is it's a race. Now, there does happen to be one bit of cool news coming from Intel with their recent announcement on optical interconnect technology that's meant to be a major step up for motherboards and peripherals with 4 terabytes of bandwidth, which is truly light years from where we are today. But the question that they haven't answered is the timing for the commercialization and adoption of this product. It may be years before we see this in the market. Now, another definite area for growth for Intel is in its foundry division, where they've secured over $8.5 billion in CHIPS Act subsidies, and they're taking on $11 billion worth of loans. Adding to that, they're also looking to secure even more funding because, hey, big surprise, foundries are very expensive. And they happen to be building plants in Arizona, Ohio, New Mexico, and Oregon, creating over 10,000 jobs. This is a lot of debt for these facilities, and it's going to take years to become operational and definitely years to become profitable. Intel's own CEO made the statement that 2024 is a trough for foundry losses, and they'll become the number 2 foundry by the end of the decade. And between now and then, we'll hit break-even operating margin midway. Now, this is extremely important to understand. The foundry business happens to be about 1/3 of their revenue today, and it will be bringing down profit for the next 3 to 4 years. This is a key item to understand, and most institutional investors already recognize this. Now let's move on and discuss what AMD has going for it. And let's start with this chart showing benchmarks from Tom's Hardware, where AMD is taking the top spot with its Ryzen chips compared to Intel's Core i9 and i7 chips. Granted, Intel has new Arrow Lake chips coming out later this fall, but for the consumer market, this will probably give AMD more share from Intel, at least in the short term. And from this chart, you can see that AMD has been slowly gaining share in the red over Intel in the blue over the past 8 years, where AMD has been making steady gains over that time. And when we look at data center GPUs, AMD is touting the Instinct MI325X that theoretically beats NVIDIA's H200 Blackwell in memory capacity and bandwidth. But it won't arrive until Q4 of this year, so I'm not going to get into too many details until it's a reality. But it could play out favorably for the company's growth, but not until 2025. And most recently, AMD has stirred the rumor mill by sharing that a customer is looking to build out a 1.2 million GPU supercomputer, which is completely insane, seeing as how the current supercomputers have less than 50,000 GPUs. Now let's move on to my opinion about Intel versus AMD, and which one may be a better stock to buy. Honestly, both companies are undervalued, and they're both going to be great investments over the long term. When it comes to the financials and the future expansions, for my money, I see AMD as a much better investment, at least in the short term. They have consistently been growing in its top segments of data center and client business most every single quarter. And Intel has had the opposite story, where it's been declining quarter over quarter, but slowly inching up when you look at it year over year. Plus, Intel has those massive investments in the foundries, which makes up nearly 1/3 of its revenue, that won't even be profit neutral for another 3 to 4 years. And yes, it's true that its data center and client group have great potential, but they have a lot of headwind in competition and also overcoming all of that debt from the foundries division. Based on the information that we reviewed, I'm banking on AMD growing quite well for the next 3 to 4 years based on this current information that's available. And depending on how Intel manages its foundry business, then I think Intel should be ready to blow up with growth around 2027. And I know that there are a ton of Intel fans out there that aren't going to like my point of view, and that's okay, this is merely my opinion. And as I mentioned, Intel is the most undervalued stock of the two, and I could be completely wrong where their stock could blow up any day. But funny enough, I had a viewer provide their point of view about Intel that really stuck with me. And he said, Intel is like keeping a dead goldfish. And that comment becomes more profound the more that I think about it. Feel free to let me know in the comments if you completely disagree with my opinion. I'd love to hear what others think. And please, let me know if you want me to compare any other companies. Thank you so much for watching.